Hello again, traders, and welcome out to another market roundup. This is Ankit from Maverick Currencies here, and we are back with another market roundup for Monday, June the 13th. What a day in the markets. There's a lot to unpack, a lot to talk about, as we are now getting stretched in some key levels here in the market. So let's quickly take a look at, do a quick market analysis and see where we are at, so we can be much more informed of where we are, and so we can plan our upcoming trades in the next 24 to 48 hours. So starting with the equity markets, again, a huge continuation that we are seeing in the markets from the last week. And the interesting part of this move is that we are actually down 9% in the past 3 to 4 sessions. Again, that's a huge move. And considering where we were, kind of making a bit of a basing pattern, we have actually gone from not really moving much or staying in a very tight range to now dropping quite a bit in such a short period of time. So we actually were watching in the currency room. We talked about this important level of support that's been there since May, and that's actually broken. And we actually gapped overnight. We stayed weak overnight, and we actually started to sell off during the day as well. So there was a bit of a continuation in that selling throughout the day. And we actually see a similar price action in the other markets as well. So there's really no place to hide. And the biggest hit that we saw in the markets were in the crypto world. Again, we actually seen this continuation of that basing pattern, and a lot of the little rallies that came across that were not establishing a trend change. And we've been actually staying bearish on this cryptocurrency for a while. And so far, as you can see, we are actually getting a nice little move down. So the question is this likely to continue, or are we getting a capitulation? And again, until we get a capitulation bottom, we need to see just a continuation patterns. And when the continuation patterns, we get a big move, we get either a little bear rally, we get a base, and then we actually move on from there. So that's the kind of price action that we are expecting for this. Again, both the crypto world and even the equity markets being down 9% doesn't mean we can go down further. So we actually have to take a look at and see if there's any sort of capitulation signs in the coming 24 to 48 hours, especially as we go into important key event on Wednesday. So the way we close off today, it's actually still putting a lot of selling pressure in the markets. And as you can see, across the board, I mean, gold was also down 2.71%. So the only thing that was actually flat was 0.09% on oil, which again at one point was down 2%, but actually recovered some of the losses. So pain across the board. Markets are now pricing in a 75 basis point rate hike on a Wednesday. Again, we actually see an acceleration in this move. It all started back on Friday when we got that pretty ugly inflation report, the CPI figures. So that now market has to now price in a much more of a aggressive rate hike, because that puts a lot of pressure on the Fed. Earlier today, we actually got a comment from Wall Street Journal saying that the Fed is likely to raise by 75 basis points. So right now, markets are now pricing in for that. Again, we're already getting a head start by having this massive move on a Monday. So there's a good chance that tomorrow we might see a bit of a slowdown, or maybe an inside candle, and then the focus goes back on Wednesday. So that's really what's driving all this move in the markets, is the yields that continues to push higher. And that rise in yields is going to continue to put pressure on the asset classes in the markets overall. So the outlook for the market stays a -2 to -3. But remember, every time we talk about being extended, both on the upside or on the downside, there's always a bit of a risk when it comes to those stretched levels where we can get some bear rallies or some bull pullbacks. Those are likely to happen. So just realize where we are. We still have a big event on Wednesday. Until then, maybe we'll have a bit of a choppy price action, but we are already starting off with something that we would have anticipated to happen on a Wednesday. So as we have discussed it before, market has a tendency to start to price in some events like that. And again, on Wednesday, it might be just buy the rumor, sell the news kind of day, because we're already moving ahead of it. On Wednesday, again, we have the Aussie employment report as well. Thursday we got the S&B, we got the Bank of England. So this week is pretty important with central banks, but most importantly is the FOMC. So something we'll be paying attention to. Tomorrow morning we have the PPI figures that comes out. Again, we already know the inflation is high. Won't be surprised if the PPI is also high as well. But I think right now it's just a waiting game till Wednesday and see what the Fed has in store for us. But again, markets usually tend to move more when there's a surprise. But when we start to see moves ahead of time, then a lot of times that's getting priced into this price action that there's going to be an aggressive or more than expected rate hike on Wednesday. All right, so let's do a quick currency analysis. Take a look at where we are, talk about some percentage levels, and see what areas we need to focus on. Let's quickly glance at cryptocurrency and just move on to the next, because we are continuing this massive downslide. There's really no sign of recovery yet. So until the market tells you so, until the market gives you an indication that it actually wants to move higher, we don't want to be getting ahead of it. That's why I said, if you're looking for a reversal, if you're looking for a regime change, you need to get the capitulation bottom, which again we don't have as of now. So let's talk about currencies, because that's where the big movements have been. And I must say, don't get to see the dollar and the yen doing the exact same thing for past few weeks. Again, these two currencies have been diverging quite a bit because of the central banks, and they're pretty opposite in their monetary policy. But today they actually came along because it was a bigger risk-off day, so yen did catch a bid. But overall, they're still in a downtrend, but we're getting a nice little bit on the risk-off sentiment. Realize that we didn't really have other currencies that take part in the sell-off. The euro and the Swiss franc was almost flat. The Canadian dollar was slightly up. I'm definitely surprised with CAD. They're still holding up despite all this market turmoil. And because of that, Aussie and Kiwi remains the number one and number two to get hit. One thing we do notice is that Kiwi used to be the worst performer. Aussie used to be better. Now we're seeing the opposite. So something we need to keep an eye on as we continue to trade this week. We want to always pay attention to this correlation and see how things are outperforming versus underperforming. So really the big moves today were Aussie, Kiwi, or the dollar against the dollar and the yen. So we'll talk about the upcoming 24 hours and see what else we can expect to move. But as far as the velocity score goes, again, yen and dollar remains at +3, and we have Aussie remains at a -3. So we have to take a look at Aussie dollar pairing. We have to take a look at Aussie yen pairing. And then in the middle, we have to take a look at this and see, do they have a potential to move? Because so far, really muted moves in these two or these three currencies over here. So let's jump in and take a look at the markets and take a look at some setups here. So first thing first, I want to talk about yields, because this is where a lot of the movement is, the pressure is coming from. And you can see where we are right now. We continue to rise. And if you look at the 10-year yields today, I mean, we were up quite a bit. I mean, we are now back in the overbought zone on RSI as we were back in April before, remember, the dollar topped. The dollar is, again, following what the yields are doing, and it's also catching the bid as it's a safe haven currency. So, I mean, at this point, remember, we were almost at this point and looked like, well, markets were actually... the dollar seemed like was not able to rally, but then here we are. We almost hit the 50-day moving average on the daily chart, and we are now back at the resistance. So the dollar is actually, if you go back in time, if we break this level again, we could easily see a quick continuation to the upside, as the last time we rallied was really back in the COVID times. But before that, this resistance have held in quite nicely. But this price action right now, it seems like it wants to go higher rather than lower. We could stall a little bit here, maybe make a cup and maybe take a little bit of a smaller pullback here, and try to actually break out from here. But we'll have to kind of see. Again, going into Wednesday, there's going to be very much a one-sided move, and then that will be a big test on Wednesday, which way it actually wants to move. All right, so let's talk about other potential setups. Again, dollar CAD comes to my list here. Again, if you want to look for a breakout of that range, I mean, that 130, I think you can easily test that again. It's at 129 right now. And I know CAD is not the one that we have actually talked about, but I think CAD could also provide a potential as well if the if the usual culprits have been the Aussie and the Kiwi. I'm actually paying attention to the CAD to see if this is actually making a change here. Notice that we are not at the highs. We actually did pull back from the highs. So we are actually supported by this support line here. And if it does break below, I think that would be a signal that the CAD actually wants to go lower. But right now, if we pay attention to the Aussie and the Kiwi, that's where really the movement has been. But again, those two are not really at the support as well, so meaning that they could actually do have potential to come down. I mean, take a look at Aussie. Aussie is actually highest level, I mean, since 2021, back in January and March, February and March. So there's a bit more of that area where it can actually pull back. CAD again, looking at CAD is actually sitting at very decent levels. Kiwi is pulling back. It's actually falling the same suit here, but we have the support of 2022 still in place. So really, it's the dollar game here. I mean, what's really driving the moves is the dollar. Now, let's talk about yen. The yen actually broke that support. And actually, this is now making a very nice little recovery. So I always say, if the prior resistance and now is now the support, or prior support is now the resistance, if that's broken out, meaning that maybe it wants to actually maybe have a bit of a regime change. And remember, we saw that back here when we got a little rally, we got a pullback, and that was a bit of a trend-changing move. So after this continuation of that move on a daily chart, we're just getting a bear rally, 1, 2, 3 candles. This could easily pull back and then try to go back up again. Right now, this is still a bearish formation, but that doesn't mean that it's ready to be shorted yet. This is still a bit of a risky play here. But if you take a look at the momentum, 4-hour chart, this was a very negative momentum. We are out of the negative momentum now. So whatever you were doing back here and, following that same strategy, you just have to use a different approach here because the price action is not as bearish. It's just actually holding it a little bit better here. But it depends on what time frame you're trading on. I mean, every time frame will tell you a bit of a different story, but daily chart, the way we close today doesn't mean it actually wants to roll over. There's still a bear rally, but it could actually continue. So we just have to pay attention to what the equity markets do. If we have a capitulation bottom and we start to rise, again, we'll actually see the dollar and the yen immediately pull back. But if the sell-off continues or intensifies, the dollar and the yen probably the right place to be. And again, we can also see a lot of these crosses like Aussie yen. Notice that we make a double top here. We actually broke out, pull back. I mean, at this point, this is no different than just a pullback to me. So the best place I find these patterns, if this is a regime change, is that if we make a lower pivot low, make a lower high, and then move lower. That's what really confirms a trend change. At this point, this is just a pullback. We'll see this across the board, like CAD yen. I mean, look at that. At this point, CAD yen broke that resistance, pull back. I mean, this is where on a daily chart you can say, well, this is a bull pullback. But on a 4-hour chart, you will say that I need to get more confirmation that this wants to reverse, because so far every little rally is actually being sold. I mean, we sold off here, had a nice little bear rally, sold off again. So something to pay a close eye on as we move into the next 24 hours. And like I said before, this is we're getting this move ahead of the Fed, which is telling me that the markets could be setting up for buy the rumor, sell the news, unless the Fed has something more in store for us. I mean, who knows? But if you missed opportunities today, maybe tomorrow will be a bit of an inside day. Wednesday, I still think, will be a great trading day to be focusing on. Some other setups that we can pay attention to is like the Aussie dollar. I mean, look at that beautiful break lower here. I know it kind of look extended. We are very much oversold on a 4-hour chart. So what we need to see is a bit of a bear rally or basing pattern to really short into. So those are the levels we're looking at. Again, another one we need to pay attention to is Aussie Kiwi, as we discussed in the currency room. I really liked this correlation changing here because for the most part, Aussie was outperforming the Kiwi and has been for past few months. So we actually broke that very key resistance, and we did pull back, and you see in this case we did pull back below that breakout point, which means that now the lower bound of that range is about that 109.60, even down to one. This is the first level that we can see as a first target. So I think we could continue to stay in between this range at about 110.73 down to 109.65. So something I'll be paying a close attention to as the correlation kind of continues on. So the other pairs that I still like on the upside, again, if you like the yen short, I think the dollar yen is really the safest place here, because the dollar yen, you can see on a daily chart, it's just consolidating. I mean, it's at this levels that we haven't really broken for years. I mean, this is back to 2002. I think we're still not really showing a capitulation sign yet, which means that I think there's further upside until we see a bit of a reversal. I mean, it does look extended, but I mean, right now for the last 4 days, notice the shadows on this. I mean, this is not a pullback. This is just a base, a very tight base. So dollar yen, I think, still stays on my top list here. We also are hitting some key levels on dollar Swiss franc as well. I mean, take a look at where we are. I mean, what an impressive move. We actually rallied all the way up here to only pull back by 5% to now back up again. I mean, these are good percentages moves we're getting here. So if you're looking for breakouts, you need to look for a confirmation for a further continuation. So if you break above this level, that's where we want to get in. So where we are right now, we are almost close to those levels, which means that if we want to go for breakouts, either it's a dollar Swiss franc, or if it's a dollar CAD, or if it's a dollar yen, we just need to see those levels break out before we want to jump in. So at this point, just look for basis, look for consolidation before we want to jump on in here. So that's the game plan here. Again, a lot of interesting things to kind of look at. Take a look at the sentiment. Looking for continuation till we get that capitulation bottom, and we don't know if that will be tomorrow or maybe that'll be on Wednesday. Till then, dollar long, Aussie or Kiwi short, and again short the cryptos until we see a bit of a regime change. We'll be doing an FOMC statement preview tomorrow. We'll be sending that. We'll be talking about the markets and how the markets or the opportunity looks around the FOMC. And on Wednesday, we'll be actually taking you through the FOMC live during the class. And on Thursday, we'll be talking about bond yields and Forex. That's, again, something I've been really paying a close attention to as the correlation goes. So make sure you watch that as well. And throughout the week, we'll be in touch. If you have any questions, reach out. Otherwise, stay focused, stay disciplined, and try to trade the markets in front of you, not the markets that you want it to be. All right. Thanks, everyone. Take care.